guys, welcome back to the channel. My name's Tom. Today we're going to talk about venture capital trusts. Venture capital trusts are investment companies listed on the stock exchange which aim to make money by investing in smaller companies. This is a vital area of the economy, and without funding from venture capitalists, many companies we consider household names never would have been able to grow their businesses. To encourage investment into this crucial area, the government offers 30% tax relief on the first £200,000 they invest into a venture capital trust. So if we take John as an example, John invests £30,000 into a venture capital trust. As a result, he is entitled to a 30% tax rebate on the income tax he will be paying. If he has income tax to pay of £10,000, that 30% tax rebate will take £9,000 off his income tax liability and reduce the overall tax burden down to £1,000. Something to note though is that the income tax relief can only reduce your tax liability down to nil. In other words, if the tax relief you're entitled to is greater than your tax liability, you will not be entitled to a tax refund. There's also a 5-year minimum holding period. Investors are required to hold the shares for 5 years. If they decide to sell before then, they will be required to pay back any income tax relief to HMRC. It's important to remember as well that venture capital trust shares are usually illiquid, meaning they can be hard to sell at a given price. All in all, venture capital trusts can offer some potentially high returns. However, they are much riskier than investing in larger, more established companies. As a result, really they're more suited to wealthy and more sophisticated investors who can afford to take a long-term view. Returns are not guaranteed and you could lose all of your money. Okay guys, I hope that's given you a good overview of venture capital trusts. I'm now going to summarize by going over the reasons to invest in a venture capital trust and the risks which should be considered. Okay, so the reasons to invest. The first reason to invest is the 30% income tax relief you will receive by investing into a venture capital trust. Number 2, dividends are not taxable, and this is actually where the majority of returns come from for venture capital trust investors. Number 3, it results in increased portfolio diversification. And finally, it's supporting UK businesses to grow. Okay, now the risks considered. Venture capital trusts are a high-risk investment. Investors can lose all of their money, returns are not guaranteed, and therefore really they're more suited to wealthy or sophisticated investors. And finally, there's a 5-year minimum holding period. If investors sell the shares in under 5 years, they will be required to pay back any income tax relief they've received. Okay, there you have it guys, venture capital trusts. I hope you learned something. I hope you enjoyed today's video. If you gained some value from it, please like and subscribe. Thank you, and until next time.